Good morning, everybody. I'm Matthew Dixon, back from a well-earned holiday, bringing you the Traders Report now on 3.0 TV. So I've been away a little while, but obviously markets never stop. We've had quite a powerful downturn in the markets, and I'm just looking here at the Fear and Greed Index. This, you can see I've got it labeled here or shown here. Basically, we're now at an extreme fear reading of 14, and that actually came from an even more extreme fear reading of 10 over the weekend. Now, we see these extreme fear readings when the market is really heavily sold down. And last time we saw a reading worse than this was the FTX low of, well, a couple of years back now, where we saw Bitcoin at 15,500. And before that, the previous low was the COVID crisis. So we see these extreme fear readings. I mean, they were worse than even that 10 reading of 10. But we see these extreme fear readings when the market is heavily oversold and there's strong potential for a turnaround. The old saying goes that when there's blood on the streets, it's time to buy. And I think we've seen pretty much plenty of blood on the streets with the sell-off that we've had. People, there were people in the market at 126,000 on Bitcoin. We had it down to about 93,000, somewhere around there. So quite a substantial sell-off, but nothing really particularly unusual as far as crypto goes. We do see extreme volatility with crypto compared with other more traditional assets. So I think at the moment we can see this as normal. I'll just remove this fear and greed now and just focus a little bit more on the Bitcoin chart. So we can see from the all-time high there that we've had what appears to be quite a corrective move down. And I say corrective because it appears to be quite a bit of overlap. And we'll see that probably more when we look at Ethereum. So at the moment, I've labeled this as a WXY. Now, it is possible that we could actually label this as, I'm just trying to see whether we could, if we tried to label this as a wave one down, two up, three down, four up. And I can double check this because three is not allowed to be the shortest wave and it wouldn't be actually here. So there's still more than one possible interpretation. So we cannot be 100% dogmatic. And we've always got to take into account that you cannot predict the markets absolutely, but we can get a very good idea. So it's good when you look at correlations across the market sometimes to confirm things. So as I say, at the moment, there's two potential interpretations here. The one I'm choosing right now, and I'll show you why when we look at these cross correlations, is a WXY. That's three waves down for a W, three waves up for an X, and potentially five waves. Sorry, it's not even five waves down. It can't be five waves because this move up here overlaps this move down here. So that cannot be a one, two, three, four, five. It can't be. There's too much overlap involved there. So this is the Y wave is also made up of ABC for the Y wave, and it looks like it's complete because the C wave of the Y wave itself is made up of five waves, one, two, three, four, five. So it's looking as though it's complete as a corrective move, which would mean that this being a correction down, the push higher should take us to new all-time highs at some point. So I'm reasonably hopeful of that. We can't say for certain that the bottom's in, but it's actually probably likely. And then we can also see a very nice indicator here. We have regular bullish divergence. That is basically where you have lower lows on price and corresponding higher lows on RSI. That's called regular bullish divergence. It tells you from this point here that we're likely to see a push up in price, and that's precisely what we've seen. From 93,000, we're currently 95,500, so it's pushing up quite nicely in accordance really with that regular bullish divergence. They align perfectly. That has to be the case, and that's what we see here. So we expected to turn up from here, and that is precisely what's happened. So that's very nice. And then longer term, I'll just move on to the daily and just look at a slightly longer term picture. Just shrink this a little bit. We can see here that this cycle begins from here. This was back April the 7th of this year. So we had that corrective move down, then this move up here. So what we see if we measure from here, the 100% to zero there, or either way around, basically that's the movement I'm measuring here using my Fibonacci measuring tool. And you can see we pulled back to about the 61.8% level, that's 61.8% there, this line here. And that is actually very, very typical of a pullback, a corrective pullback. And then we might expect a push now, as I've got labeled with this arrow here, to new all-time highs for Bitcoin. That is my primary expectation at the moment. As I say, there are some alternates, but I'm just focusing right now on my primary expectation. So, what has been causing all this fear in the market? So, let's just take a quick look at the FedWatch tool here. And this, I think, tells a large part of the story. So, a couple of weeks ago, we actually had a very close to 100%. It's over 95% expectation that we're going to see a further 25 basis point cut in rates come the December 10th Fed meeting. Now that has really moved around. So now the expectation is actually the majority expectation that we're going to see a hold in rates. And that represents or recognizes a softening in economic conditions, employment growth, etc. So because that softening in expectations, they basically need to keep interest rates you know, I mean, they've got problems. They've got softening in economic expectations, but they've actually got a sticky inflation. So with inflation being higher than expected, that's really the reason why they can't actually cut rates as they would like to, or certainly as Trump would like, and they need to keep rates higher for longer to try to tackle this sticky inflation. And this is not really unexpected because I think the fact that we had tariffs definitely increase prices. We see this if we look historically, we don't need to just guess on what might happen. Historically, whenever tariffs have been applied, we see a tick up in inflation, and then we would see basically interest rates would need to stay higher for longer. So that's exactly what we're seeing here. Not the cut as we initially expected. There's now less of a chance of that. Much more likely we'll see a hold in rates at these relatively high rates in recent years. So that's what's hurting risk assets is the interest rate expectation, and effectively, I think, caused by mainly by the tariffs that are causing. They basically cause the headwinds to trade. They reduce international trade, and they increase prices and inflation. So they've been seen in the past when they've been used to cause trouble, cause economic strains and stresses, and that's exactly what we're seeing now. So I don't think it's a good policy. So let's get back to the charts. This was Bitcoin. I think we've covered that reasonably well. Just flip over to Ethereum. Ethereum's really nice here. We can see that we had this push up to all-time high. We had the Petra upgrade, powerful push up to all-time high. We've had this push down. Interestingly, it hasn't overlapped what I've got labeled here as wave one, wave two down here, wave three here, this wave four. That actually is really nice. It says that we are actually probably very close to a push higher, which is what we're seeing. We cannot overlap this movement down this is a larger impulse higher. It cannot overlap this wave one here, which it doesn't at the moment. So, in other words, there's not much room for downward movement. So, a turn is highly likely, and we see a very nice ABC movement down here, which is a corrective movement. So, we should push up to new all-time highs reasonably soon. And I'll just go to a shorter time frame to focus a little bit more on that correction. Let me just open it out a little bit. Let's just see, there we go. There's the all-time high for Ethereum. And we can see this is really corrective. I mean, this is very nice. So I said I look at cross correlations. Here, I think it's very, very difficult to count this as an impulse down because we can see that every move is overlapping. So for example, we got from the all-time high a move down, then we got this movement up overlaps, then we got this movement down, this movement up overlaps this movement down, and this movement up overlaps this movement down, and this movement up overlaps this movement down, totally overlapping. So I cannot see this as an impulse down. It's corrective as far as I'm concerned. It's actually quite a clear ABC move down, I think. And it's possible we have a 3-3-5, which would be what's called a flat correction. So we see ABC for the A wave, ABC or even a triangle for the B wave, then a 1-2-3-4-5 for the C wave. And the C wave itself here, this little C wave here is made up of 1-2-3-4-5 again. So it's actually really satisfying, very, very nice. And once again, we also again have some bullish divergence here where we've got lower lows on price, corresponding higher lows we can see here on RSI. So that told us there was likely to be a push. And then again, if we measured the A wave, I'll just show you here with the Fibonacci measuring tool from the top, the all-time high, down to here. I've measured the A wave, that's 100%. I just transpose that over to the top of the B wave here. And we can see basically the 100% level here. So what I'm saying is the C wave equals the A wave. That is the most common relationship with a simple ABC like this. And it tells me that it's highly likely the ABC correction is complete. We've also got the bullish divergence. We've got lots of indications that we're going to push higher from here. And in fact, we have actually pushed quite nicely higher so far. So that's looking really promising. I'll just flip quickly through the rest. Quick look at XRP. We had with XRP, if I just shrink this a little bit, we had an ABC down with a B wave as a triangle here. So we've got a B wave triangle and a C wave down. C wave was a terminal wave from the triangle, a terminal thrust from the triangle, and then we're pushing higher. So some kind of either WXY or ABC down for B, and then we should be pushing higher again. So I still think we're going to see new all-time highs for XRP. Looks really promising. Flip over to Solana. Likely that we've seen from this point here, it's not the all-time high, we'd have to go back further. But basically from this point here, which was around the 250, 255, I think, somewhere around here, let's just see. Yeah, that level. Let me just see again. Yeah, 253. So we're basically seeing some kind of three-wave down for A, possibly a triangle B wave, and then five waves for C. So it looks like the ABC is most likely complete. Once again, we see some bullish divergence. We can see lower lows in price and high lows corresponding RSI, telling us we're likely to see a turn higher in price. And, I think we do see a 1, 2, 3, 4, 5 quite clear. And the fifth wave itself is broken into five waves, 1, 2, 3, 4, 5. So I'm really hopeful that we have seen the low in Solana, there or thereabouts. We can't be absolutely certain, but we're somewhere there or thereabouts. And actually, if I was to go through all the rest of the assets, that's pretty much the same story. I'll just look quickly at SPX. SPX is telling us that we've either completed the correction down here, or it's looking actually quite impulsive up here. So this could be A, B, C. It could be some kind of contracted flat correction. It's possible. But it's looking reasonably impulsive for the time being. So I'm hoping the correction is complete. It could have completed here, and then we've got a 1 up, 2 down, 3 up. We'll need to see, and we probably need to look at shorter time frames to see the actual outlook. But again, we have some bullish divergence. So I'll just show you how I'd measure the divergence. So we'll look at from here, we don't use candles, we use solid bodies here. So we can see actually there's an upward there in price, in the lows on the price. And we look at the corresponding on the RSI. So we can see, so we've got higher lows in price and we've got lower lows in RSI. We come from oversold RSI as well. So that told us that we're likely from this point here to get a push higher. That's precisely what's happened. So we can see how amazing these signals are. Beautiful push high there from 6,600. We're already 6,679 up here. So looking very, very promising for more upside. And that's pretty much same across the board. I'll just touch very briefly. Finally, there's so much more we could do. But on DXY pushed quite a bit higher. That represented the change in expectations on interest rates. Less likely we're going to get a cut. That means dollar strengthens a bit, and that's why we've seen the dollar strength. So dollar long term, if I go really long term, we'll go on to the weekly here. Yeah, we've been a very, very long uptrend. It's actually much higher than that. So we look like we completed possibly an ABC correction here. And there again, we saw that C wave almost equaled 100% of the A wave, and we started pushing higher. So we may still get further downside on the dollar. And this was the question I posed some time ago. Will the dollar bounce on long-held support or begin a serious decline? So far, it's bounced. If we get further decline and we may even just get a small pullback, that will be positive for risk assets. So it's not telling us everything at the moment, and we'll perhaps focus more on that because we need to adjust this support line. and look at that in maybe on a shorter time frame in more detail. But anyway, overall, I'm actually bullish the markets. I think we've probably seen a bottom there or thereabouts. We can't be absolutely certain or precise whether the bottom is in, but it's there or thereabouts. So dollar cost average is the order of the day. I'm always saying that. Don't commit everything at one particular price. But overall, I'm hopeful the markets will at least see a decent rebound from here. And yeah, thankfully, I think we will see hopefully a new all-time high to come in Bitcoin, and we should see the alts following suit. So thank you for listening. Great to be back with you again. Look forward to catching up again soon.